All right, well, let's get started. So, welcome to the webinar. This is a bit more of a knowledge-giving webinar, and I'm delighted to be joined by Peter Davies from WMT LLP, who are actually one of our clients. So, hi, Peter. Nice to see you.
Morning. Hi, Joe.
But Peter is, I think, the go-to person when it comes to the hospitality industry and finance and accounting. So there is new legislation coming through, as this quite rightly states on the slide, and Peter's going to give us an update this morning on what that legislation is and how it might affect your hospitality clients so that you're in a better place to advise them more effectively. We're due to run for an hour. There's quite a lot of content to go through. We may have time for questions at the end, so if you put them into the Q&A option on the toolbar rather than the chat. If we don't get to them all, I will send them on to Peter and hopefully he can come back to you by email afterwards if we don't get to them all. And we are recording this webinar as well. So anybody who's registered for this will get a copy of the recording if you need to recap on anything. So I'm going to shut up because I'm wasting time and Peter's got a lot to go through, and hand over to Peter, and I'll see you at the end. Over to you, Peter.
Morning, everybody. Thank you, Joe. Thank you all for taking time to log on this morning. My name is Peter Davies. I'm one of the partners here at WMT, and we are specialists in hospitality, but particularly with issues relating to tips, service charge, trunk, and all of the legislation surrounding that, including the new tipping legislation that is coming in later on this year. What I'm going to do also is take myself off video for now, so that you can focus on the slides rather than focus on me. And we're going to dive on in and crack on with that as well. There is quite a lot to go through. We're going to go through the underlying legislation first, the Employment Allocation of Tips Act, and then we're going to have a look at the Statutory Code of Practice and all of the different issues that these two pieces of legislation will bring for your clients, and they will bring them for your hospitality clients. Every business is going to be affected by this legislation when it comes in. Even though you may have clients who say, well, we've always done the right thing and we've always given the money to our staff, that's not enough for the new legislation. There is many more obligations that your clients will need to understand and make sure that they're acting in accordance with. Okay, let's give a little bit of background first. So the Allocation of Tips Act started as a private member's bill, which started its journey through Parliament back in 2022. The reality was it was government legislation, so that's clearly the last government as well. It went through Parliament with cross-party support, so it had the support of the Labour Party. To be fair, there was probably very little scrutiny and very little debate when the legislation went through, because most MPs took the view of this is about giving tips to staff. That is a good thing, therefore we will vote for it. But there wasn't an awful lot of consideration of the practicalities. The legislation comes in two parts. Firstly, there is an Act of Parliament, the Allocation of Tips Act, and then accompanying that, there is a Code of Practice, and that is a statutory Code of Practice, so it has legal force. And that Code of Practice was passed by the Lords on the final day of parliamentary sweep-up before the election was called. So this is employment legislation. What it does is it dumps a whole new chapter into the Employment Rights Act. And it's going to take effect from the 1st of October. So all of this, 1st of October, is the key date that your clients need to work towards. Important point is that the legislation is not retrospective, so it won't deem anything that your clients may be doing now as wrong, and it won't apply to money that customers of your clients may pay before the 1st of October. So it's from when they open their doors on the morning of the 1st of October forward. That's what the legislation applies to. Okay. In a bit like, what did the Romans ever do? For us, there is a long list of things here. So there were 9 broad changes that is introduced by the Act. And what we'll do is we'll go through those and we'll look at those and we'll talk about what those implications are. Okay. The first thing that the legislation does is it says, right, okay, what is within the scope of these new rules and what is not within the scope? And it introduces two new concepts, a concept called an employer received tip and a concept called a worker received tip. Everything that goes on in your client's business, every type of discretionary payment that customers make will be one or other of these things, employer received tip or worker received tip. Now, in simple language, an employer received tip is money that is requested by the business. So, for example, a discretionary service charge on a bill. It's money that is paid to a business. So that might be a gratuity that's paid on a credit card, for example. It's money that passes through the employer's hands, or it's money where the employer exercises control over it. So this may be cash tips, where a business actually says, we are going to deal with them, we are going to decide what happens, and it's not just the case that the staff keep their own cash or share it out at the end of the night between themselves. Nowadays, customers also have the opportunity to pay tips through apps, mobile smartphone apps. The answer as to what's included there is it depends where the money goes. So if the money goes directly to the worker, the employee, then it is a worker received tip. If it goes into a general pool along with the service charge, or it goes to the employer or the employer deals with it, then even though it's been paid through an app, it is still an employer received tip. It's really important that your clients understand what types of money are being received in their business, because your clients will have obligations for all employer received tips, but not worker received tips. So, for example, if a customer says to a member of staff, thank you, that is lovely, there is a £10 note, and the employer has no involvement, no control over that, then that is outside of the scope of the legislation. If any of your clients are operating in Northern Ireland, that's the only part of the UK that this legislation doesn't apply to. Okay, so the legislation applies to England, Scotland, and Wales. Okay. So this is the first thing that your clients need to understand. The types of money that are going in our business, are they employer received tips or worker received tips? Having established what types of money there are, what the legislation then does is it seeks to quantify that. And it says, for the value of this legislation, the value of that tip or gratuity or service charge is 100% of the face value as paid by customers. Okay. So what that means is a business is not allowed to keep, charge, deduct, or retain any of that money for any reason. So that will include things like administration, credit card fees and commissions, bank charges, paying for the cost of a trunk master, providing staff with non-cash benefits, anything at all like that. None of that can happen. All of the money, 100% of it, must be paid to workers. Okay. The only amounts that can be taken from this are amounts that are required to be deducted through payroll. So, for example, when the money is paid through payroll, income tax will be due. So income tax can be deducted. If your clients are paying this money through payroll and there is no trunk system in place, then there will be national insurance contributions. And businesses are allowed to deduct the employee's element, but they must fund the employer element. They're not allowed to deduct the employer element. Same principle for workplace pension contributions. They can deduct an employee's pension contribution, but not an employer contribution. And if there is a service charge that is not portrayed to customers as discretionary or voluntary, then the business must also deduct the VAT element from the tip or service charge as well. No other deductions are allowed, so only taxation. And when we say workers, what we mean is employees of the business or employees who are supplied by an agency. People who are not allowed to receive any of this money would be self-employed workers, people who are working through their own personal service company, and directors of the company if they are not also concurrently employed by the business. This is going to bring costs, extra costs for many businesses. So what many businesses have been doing quite legitimately is saying, okay, we have to pay costs to actually get this money, because when our customers pay us on a card, we get charged for it. Visa, MasterCard, Amex would charge commission, and the average commission rate is 2%. The government has said that those costs are costs for the business to fund, and they are not allowed to deduct them from the tip pool. So across the sector, that's probably going to be somewhere in the region of £140 million a year cost to the sector by the fact that they can no longer cover the costs of collecting this money. So really important point, everything that comes in must go out. The business is not allowed to keep any of it. The legislation then says that there is a time scale by which this money must be paid. So it says that the money must be paid to workers by the end of the month following the month in which it was paid by the customer. So for example, if I go into a business on the 2nd of October, have a lovely time, pay the service charge, that money must be paid to staff no later than the 30th of November. And paid is the physical action of it leaving the business and ending up in the worker's pocket or bank account. So it's not a book entry, it's not an accounting entry. When we say month, we mean calendar month, not financial month, not pay month, we mean calendar month. Okay. So for some businesses, this may be a problem. So the problem will be if people tend to pay a month in arrears, it is possible that they may have to either bring their payday forward, or it's possible that they may have to pay the tips and service charge more quickly than they're doing at the moment. Okay, because you must pay it by the end of the following month. Now, at the moment, what many businesses and their trunk masters do is save up money in the stronger trading periods in order to ensure that they can give a relatively consistent and stable level of earnings to their staff in the quieter trading periods. Now, that's not going to stop, but the ability to do that is going to be restricted going forward. So there is much more emphasis for businesses and trunk masters in understanding we need to pay this money out now within a designated timeline. That may mean that if we have a quiet trading period, our staff may earn less money. And your clients will need to understand that, and they will need to essentially cash flow and look at this to say, is there a point in time when our staff may end up with less money than they are receiving today? So important point there, there is a time scale, we must stick to that time scale. Okay. There is a new set of rules that is called the place of business rule. So, for example, if I am an operator and I operate 5 restaurants, what I will no longer be able to do is to take some money that were paid by customers at restaurant number 1 and pay it to staff who work in restaurant number 2 or 3 or 4. So the principle is that the money has to be paid to the people who work at the place where it was generated. So we can't have a pool across the whole of a business. We can't subsidize one trading site from another trading site. And that may mean that if a particular trading site has a short-term problem, or if a particular trading site is just less busy, less lucrative, then the workers who work at that particular location may lose out as opposed to today. Now, sometimes workers will work in more than one place of business. So come back to my example of I own 5 restaurants, and I may have a team member that works some of their working week in site 1, some of their working week in site 2, and a few hours in site 3. That worker will be allowed to receive a share of money from all of the sites at which they have actually worked in that pay period. Okay. So if you do work in multiple trading sites, you can receive money from each of them. Now, as with every good rule, there is an exception to it. And the exception is what we call non-public places of business. So a non-public place of business is defined as a place where there are workers, but there is no face-to-face interaction with customers of the business who pay tips and service charge. And translating that into simple everyday language, what that means is that you may have a head office, you may have a central production unit, you may have a dark kitchen. So these are places where there are workers of the business, but there are no customers at that place who are paying tips and service charge. And what we are able to do is we are able to take an element of the money generated at a trading site and pay it to workers who work in a non-public place of business. So we can't subsidise one trading site from another, but we can take money to pay to the staff who work in a non-public place of business. Okay, because often what will happen is a number of roles may be centralised rather than being done at each individual site. There may also be businesses that have multiple departments or multiple revenue streams. Take, for example, a hotel. So a hotel may have 2 bars, 3 restaurants, room service, banqueting, functions and events, all of which generate their own revenue and their own tips and service charge. But they're all physically located in one place, in one building. Okay, so when we talk about the same place of business, it's a geographic test. So if we have multiple departments within a single place, each of them generating their own money, your clients continue to have the option of saying either I will treat each of those separate departments as a separate fund and pot of money, or I will put them all together into one, and I will have a single fund for all of this place of business. But as soon as you get a place of business that is geographically distinct, that's when these rules come into effect. Okay. Agency workers. So agency workers and how we deal with agency workers, this presents one of the most practically challenging aspects of the new legislation. And the reason for that is that historically, most agency workers currently do not receive a share of tips and service charge. Now, that's not because businesses are mean and horrible and want to discriminate and do down agency workers, but there are practical difficulties and legal difficulties in paying money to people who are not employed by the business and who are not on the business's payroll. Now, the market has dealt with the problem that this brings. Agencies know that their workers don't get a share of this money at the moment. So what agencies do is they pay their workers higher rates of basic pay to compensate for the fact that they don't get a share of the tips and the service charges. So the market has dealt with the issue. Unfortunately, what the new legislation says is that agency workers have the right to be considered for a share of tips and service charge on the same basis as a directly employed member of staff. Now, for reasons that I'll come on to, that doesn't necessarily mean the agency worker will actually get any money, but we have to consider them. We can't have a blanket exclusion that says you are supplied through an agency, you do not get any of this money. Okay. With the agency workers, if money is due to them, the business is in a situation of either having to pay that money, that tip, service charge or trunk, through their own payroll. That's got some practical challenges in terms of putting them onto payroll, processing it, getting all of the necessary information, and making sure they've got all of the right to work documentation. So many businesses are likely to say, we don't want to do that. We will simply want to pass this money to the agency and they can then pay their workers instead. That's fine. But what it means is that the business needs to be satisfied that the agency is paying all of that money on to its workers by the end of the following month and with no deductions, except, as we said before, payroll deductions. And the reason for that is if the agency doesn't do what they're supposed to do, their worker has a right of redress under the legislation to an employment tribunal. And that right of redress is not to their agency, but it's to the business where they actually carried out the work. So the business can be responsible and held responsible if an agency doesn't deal with this correctly. So there's big practical issues with this. The government has been asked to give further guidance about how all of this is going to work in practice. We haven't had anything as yet. Now the election is over, hopefully we may get some practical guidance on it. Okay. I'm going to talk about the code of practice later on and what the code of practice says about people earning different amounts of money. But one little spoiler alert is it says that we are allowed to consider the level of basic pay that people get. Okay, so we're allowed to take that into account. Now, I'm going to give you a really, really simple example here. I have two agency workers. I have two workers in my business, both of whom are bartenders, Chaz and Morph. Okay. Morph is employed directly by me. So he's on my payroll, he works for me. And I pay him a basic wage of £11.50 an hour. And in addition to that, he gets a share of the tips and the service charge. And let's say he gets, on average, another £3.50 an hour. So Morph's overall earnings are £15, and he's very happy with that. Okay. Now, Chaz is doing the same job as Morph, but he's supplied to me by an agency. He's an agency worker who's come to work for me. The agency, if they were paying him a wage of £11.50 an hour as well, I am now going to have to pay Chaz tips and trunk in addition, and I'm probably going to have to pay him £3.50. So both of the two workers end up in the same place. Okay. So one of the key things there is your clients need to understand from the agencies they use how much of the wages that they pay to their workers, not how much do they charge to the client, because that will have the markup in, but how much they actually paying to the workers. Because only with that information can your clients start to look and say, what is needed to make sure that these two people end up in the same place? But let's say that what happens now is that the agency, knowing that Chaz doesn't qualify for the tips and service charge, they pay Chaz a higher wage. They are paying him a basic wage of £15 an hour. So what's happened is that Morph and Chaz have both ended up at the same place. They've got there by a different route, but they've ended up in the same place, and they're both happy. Now, what we can do under the legislation is to say, we are going to take Chaz's basic pay rate of £15 into account. He's already ending up in the same place as Morph is. So if we gave Chaz more money, that would now be unfair to Morph. So in that situation, it would be legitimate for us to say, we are not giving any more money to agency worker Chaz. We've considered him. There was no blanket exclusion, but he doesn't end up with any money. Now, problem, of course, is if his basic wage is somewhere in the middle, yeah, then what we're going to have to do is to pay him an element of money, not as much as we pay Morph, but an element. So agency workers, complicated, complete dog's breakfast, all of this pointed out to government, practical guidance requested, not yet here. But if your clients are using agency workers, they need to be alive to this. They need to be speaking to their agencies now about what systems the agencies are putting in place, what visibility the agency will give to your clients, what the pay rates are that your agencies are paying. So those conversations need to start now. Okay. Like we said before, there are two different ways of paying the agency worker. One is through the main business payroll. One is by passing the money on to the agency. Neither of them are good options. Both of them have downsides to it. And I think that the first thing to consider is, number one, do I really have to use agency staff? And I get that sometimes you do. But then secondly, if so, I need to start talking to my agency now, okay? Because if we don't get this right, there are risks to your client, yeah? Because ultimately, if it goes wrong, the worker's claim is not to their agency, it is to your client. Okay. The legislation also says that employees are not allowed, even voluntarily, to opt out of any part of this. And what an employee is, we are not allowed to do post 1st of October is make any change to an employee's contractual pay, their wage, their salary. We are not allowed to reduce that if that is connected to them receiving tips, service charge, and trunk. So sometimes what happens maybe with a very new business is a very new business might say, okay, you know what, when we take you on, we'll take you on as fully salaried, and 3 months in, when everything's a bit clearer, then we'll sort out trunk and we'll agree a new level of salary or wage with you. Won't be able to do that in the new world. Okay. If you have a business that is not operating trunk at the moment, so a business that says, we will manage all of this, we will deal with it. There is a national insurance bill, we accept that, but you know what, we still want to deal with it. Your client essentially has a once and forever decision to make, because they will need to consider, if I want to have a trunk system and the benefits of that, I need to get that in place before the 1st of October, because introducing a trunk system in that scenario will mean a change to the employee's T's and C's. Okay. What the new law doesn't do is change anything that is agreed before the 1st of October. But it will say from that date on, you are no longer allowed to reduce terms or reduce wages if that is connected to tips and service charge. If wages are being reduced for another reason, somebody's reducing their hours, somebody's changing site, somebody's going to a different role, that's fine. Okay. And obviously what the new legislation doesn't do is stop wages from increasing, only decreasing. The new legislation puts a statutory obligation on every business. So remember something I said a little earlier, every business is affected by this. The business needs to have a written policy, and that written policy has to say, what type of employer received tips do we receive, and how do we ensure that we, the business, satisfy our obligations, which are that 100% of the money is paid to staff by the end of the following month and in the place where it was generated, with the exception of non-public place of business staff. There is a proactive requirement for the business to make this written policy available to all workers who work in a place where tips are paid, even if those workers don't get a share of the money. Those workers will include agency workers. So you may have an agency worker who turns up at very short notice and is only going to work for a very limited duration. They will have a statutory right to be given a copy of the written policy. So your clients need to have systems in place that ensure that those policies are given to people. Okay. If you have a trunk system in place, that trunk system will also have a set of rules, which again should be in writing. And again, they should be given to all of the people who work in that business. Okay. If workers aren't given the information that they're entitled to, they are able to bring a claim to an employment tribunal. So they're entitled to have the written policy, they're entitled to have the rules, they are entitled to ask to see how much money, how much employer received tips was paid at the place at which they work in a month. Okay, so for example, on the 1st of November, I could write to my employer and say, I want to know how much employer received tips were paid at my site in October. I can't ask for a period before the 1st of October, but I'm entitled to ask to see that. I am not entitled to ask to see how much money other people have been paid, but I'm entitled to know the overall total. Now, if my employer says, go away, we're not giving you that information, I am able to go to a tribunal. And if a tribunal supports that and upholds that complaint, they can give an order against the employer of up to £5,000. The tribunal can also give an order for any other similarly affected worker, even if that worker has not brought a claim to the tribunal themselves. So in the new world, this legislation essentially facilitates almost class action suits. So it means really, really important. Employment tribunals now, if they find against a business relating to all of this legislation, that can get to a very, very big number very quickly. So really important for businesses that they understand what their obligations are and what the rights are that their staff have to information. Now, the government have said that they believe that trunk systems are good practice. They believe that what they call a well-managed trunk system is a good way for a business to deal with this. They're not forcing businesses to use a trunk arrangement, but they are giving you a pretty good steer. Okay. So at the moment, a business may use a trunk arrangement principally because it will then qualify for an exemption from national insurance. Okay. In the new world, having a valid trunk arrangement will also mean that there is an automatic presumption that the arrangements in place are fair. Okay. And we're going to touch on that word again when we come to the code of practice. That is quite an important principle. What it means is that the employer does not have to justify why they think it's fair. They can simply say, we have a valid trunk arrangement. It's valid because it's in line with the national insurance regulations and it is operating in line with the code of practice. Nothing to do with taxation is changing as a result of this legislation. So there is no change to tax rules, no change to national insurance rules. If a trunk arrangement is outside the scope of NI today, it will be outside the scope of NI tomorrow. So let's just have a little look and say, why might we have a trunk arrangement? Okay. Clearly, it brings significant financial savings for staff, and it means significant extra savings for businesses. Now, the government earlier this year did a consultation into the code of practice, and 83% of those businesses who responded said they use a trunk system. In central London, I would, from the work I do, around about 95% of quality dining businesses use a trunk system. And these percentages are increasing quickly because an awful lot of businesses are introducing this in advance of the 1st of October. So if you have clients at the moment who don't have trunk systems in place to deal with tips and service charges, they really, really need to think about it. Really simply, if a customer pays a tip of £100 and we deal with that through a trunk system, most employees are basic rate payers. They will pay £20 in income tax. Employee walks away with £80 in their hand, and there is no cost here to the business. £100 came in and £100 has gone out, split between net pay to the employee and tax deductions for revenue and customs. If we don't have tipping and service charge, so if a business says instead, do you know what, I can't be dealing with all of this. It's all opaque, it's unclear, it's smoke and mirrors. Do you know what? What I'm going to do is I am simply going to charge my customers a higher menu price and I will pay my staff higher wages. Okay. This is the implication. Now, one caveat, as you can see, I wrote this when the employees' national insurance rate was 8%. I'm clearly conscious that on that as well. So NI has been at different rates over the last year. Okay. Essentially what that means is if my customers pay an extra £100 in menu pricing, my staff will only end up getting £39.44 of that. Whereas beforehand, they were getting 80p in the pound. Now they're only getting £39.44 because of all of the other additional costs that come in with that. So having all-inclusive menu pricing is very financially efficient in the UK, which is why most restaurants now have a service charge model. And it's only there because it keeps business costs down, it means staff take home more of the money, and it keeps the overall cost to the consumer lower than it would otherwise be. Okay. As with everything in life, nothing comes for free. There is a trade-off for having the favourable financial treatment of a trunk system. So for businesses, it means they genuinely have to give away control over the funds to the trunk master. That doesn't mean they're going to give the cash to the trunk master or pay it into their bank account, but it's the right of control, the right of decision making that has to go to the trunk master genuinely. So if I'm the owner of the business or one of the directors or one of the partners in the business, I cannot manage the trunk system myself. I have to get somebody independent to do that for me. We need to make sure that it's operating within the scope of the code of practice, because if we don't, then we don't have that automatic presumption of fairness, and we could be exposed to tribunal claims. And from the 1st of October, I must now bear the costs of running the trunk system. I am not allowed to essentially charge those to the fund. Okay. For employees, there are some trade-offs as well. Okay, so trunk is not a part and cannot be a part of terms and conditions. It's not a contractual agreement, and that means generally it's unenforceable. Okay, so the employee needs to have a degree of trust and confidence in the trunk master, because if they don't get what they expect, they've generally got no right of redress over it. If the trunk is operating in line with the code of practice, the employee can't challenge it on the grounds of they just don't like it. Okay, so I don't like it. I think I should get more. As long as it's operating within the scope of the code, that's just tough. Okay. And clearly, we need to avoid any risk or perception of risk that the trunk is all about who's mates with who, bias, favoritism, personal friendships, personal vested interest. Really important that staff have that confidence of it is done fairly, it is done properly. Okay. Clearly, because we are qualifying for an exemption from national insurance, that means Revenue and Customs have an interest in this as well. And Revenue and Customs will look at trunk arrangements from time to time. And post 1st of October, I'm expecting them to do it more than they have been. They will want to be sure that the money that we are paying out and qualifying for this exemption wasn't part of our sales revenue. So it was these extra discretionary payments that customers make. They will want to be sure that the trunk master is somebody who is able to do that. So in other words, it's not being run by the owners of the business. That the business is not controlling it and deciding how it is done. Who qualifies and how much do they get? Yeah, if the business is doing both of those things, Revenue and Customs will have a problem with that. And the money that is paid out through the trunk system cannot be part of contracted earnings. It has to be outside the scope of the employment relationship. And there is a big risk for getting it wrong, which is Revenue and Customs can come along and say, we want to have national insurance, employees and employers element for up to 6 years. So this is not a reason not to do it, but it's a reason to do it properly and take advice. Okay. So the government, as we said before, the government believe that trunks are best practice. What the government have said very clearly is if we have a trunk arrangement in place, the business does not carry any responsibility for that trunk arrangement under the new legislation, provided that it is acting in line with the code of practice. And the business doesn't have to justify the fairness of it, and the business cannot be challenged before an employment tribunal so long as the trunk arrangement is in line with the code of practice. So we've mentioned the code of practice quite a bit. Let's now spend the last part of the session going through what's in the code of practice. Okay, now, why have we got a code of practice first off? Well, the first thing is that the legislation, the underlying legislation, talks a lot about fairness. But if you read the legislation, it doesn't define what that word means. And it can't. And the reason for that is it is a subjective word, and you can't have subjective things in legislation. Legislation is very black and white, it's very objective. So what the code of practice does is the code of practice says, right, what does the word fair mean and the word transparent? How can a business behave in line with this? So the code is statutory, it's had parliamentary approval, and that means that if we do go to an employment tribunal, tribunal judges must use the code to decide whether something is right or something is wrong. And a business must take the code into account when designing and implementing their policies. It doesn't mean you have to slavishly follow every clause of it. But what it means is if you don't follow the code, there is a much higher burden of proof to show how have we behaved fairly. Okay. What the code does is it says that the concepts of fairly, of what is fair, is based on some overarching principles. Those principles will be different for different businesses. And what businesses must do is they must look at the factors that are taken into account in their own business that decide, why do people get different amounts of money? So, for example, why does somebody get one amount of money and somebody else gets a greater amount of money? The code explicitly says that splitting the money equally is only one way of behaving fairly. There are lots and lots of others. Okay. The code doesn't seek to micromanage. It does say there is no one size fits all. Yeah. And it applies to all employer received tips. As we said before, company directors, they may or may not be workers. It depends on whether or not they also have an employment contract and pay themselves the minimum wage. If they don't, then they are not allowed to receive a share of the money. Okay. Talk a little bit about the tipping policy beforehand. Must be in writing, must be made available. That's a proactive obligation with that. A business does not have to share that with its customers. Okay. An important point at the bottom, if people don't understand what they're going to get and how it's going to be worked out, we can't be said to be behaving fairly. In the code, the government have set out some factors. It's not exhaustive. It says there may be other factors in your business that are also fair. The factors need to be applied clearly, objectively, consistently, and reasonably as well. So the sorts of factors the government have considered: job role and position. So people doing different jobs get a different share of the money. Department, people who work in different parts of the business get a different proportion of the money. Number of hours worked. So people who work more hours full-time as opposed to part-time may get a different share of the money. We talked about level of basic pay earlier, earlier, when we talked about agency workers. Performance, so if somebody is a complete star and somebody else is doing as little as they can get away with, we can distinguish. As long as the reasons for that, we've got proper, objective, clear reasons for it. Seniority, so people in a more senior role, their level of responsibility or skill, the length of service that they've got with the business. All of these are things that the government have said, if you apply this consistently and objectively, then that is designated as fair. So most businesses and most trunk arrangements will have some or all of these factors. It's important that we understand what are the factors we use, and it's important that our rules that we're giving to our staff tell them which are the factors that are considered in terms of how their money is shared out. We need to be careful that we are not discriminating against people or groups of people. Obviously, we've got our standard protected characteristics there as well, but also we need to be alive to the risk of indirect discrimination as well. So if an employee believes that they are not receiving a fair share of the tips because of their race or their disability or their sexual orientation, they will be able to go to a tribunal. Okay. If they believe they're not getting a fair share because they work harder than somebody else or they've been here for longer than somebody else, tough. That's not a protected characteristic. That's not discrimination. But we would still need to think about, is it fair? The legislation, the code of practice says that we should consult with our workers to obtain a broad agreement. Okay, now that consultation is generally not a statutory one. So we don't have to have reps, we don't have to have defined timelines, we don't need to have everyone agreeing to it. The only time that we would need statutory consultations are if the tips are dealt with as part of a contractual undertaking, i.e. there's no trunk, or there is a collective agreement with the trade union in place. Okay. Broad agreement is not defined. Yep, so it's not a threshold. It's also not going to be a simple majority as well. So I think the maxim that I would tend to use is most of the people agree most of the time. And to be fair, that's as good as it's ever going to get. Okay. The policy that we've got and the rules that we've got need to be, to use the phrase, a living and breathing document. Okay. So we have to review them regularly. When new team members join, they should get a copy. We should probably look maybe on an annual basis as this. We can't force and coerce people into it. Okay. If an employee does try and go to a tribunal, the fact that most of the team have accepted the arrangements as being fair will be a very, very important factor for a tribunal. Yeah. So a tribunal may well say, you may not like it, but it's within the scope of the code, and most of your colleagues are very happy with it, so we will dismiss your claim. Final bit, so I'm conscious of time, transparency. So, as we say there, we need to tell people, our team, what types of money do we collect? How do we meet our statutory obligations? How do we behave fairly? People need to know, how is my slice of the cake arrived at? What are the factors that affect that? Why might it go up? Why might it go down? I'm entitled to know how much money has been collected in the place where I work. Okay. But both the legislation and the code give businesses a very strong warning about do not go sharing details of how much money have been paid to other people. So if somebody was to say to their employer, how much trunk does my manager get? We can't give people that information. That will be a very clear breach of the Data Protection Act because it's personally identifiable information. Okay, so people can know the principles, they can know the structure and the framework and the factors, they know how much they have got, but they're not entitled to know how much other people have got. You do need to be careful because giving out that information, like I say, that could be a breach of the Data Protection Act. Okay, we've done really well there. So Joe will know that for me, sticking to time is quite rare. So we've managed to get to, I think, just before 5 to midday. I'm conscious I've rattled through this at a fair pace, to be honest with that as well. What I'm going to do now is I'm going to take this off share, and then if we've got, Joe, if there are questions that have gone into the chat or the Q&A while we've been talking, or if people have got any that they'd like to ask now, we've got about 5 minutes because I'm conscious I did rattle through this quite quickly.
Well, there's nothing in the chat at the moment, Peter. So I don't know if people are having a think about the questions they'd like to ask you. There are obviously, Peter, lots of solutions around that those in the hospitality industry can use to monitor their trunk before they pass it over to payroll.
Yeah.
And I know obviously that there's a product that you're super keen on because we've been promoting. Do you want to just say a little about that?
Yeah, I mean, I'll actually give a genuine, for most businesses, there are 2 different ways of dealing with this. And I'm going to make the assumption that both of them are going to be trunk. Okay. One of which is essentially a tech solution, and that will generally be better for those businesses where there is no service charge. It is just spontaneous customer tipping. So the amounts are maybe a little more modest. They fluctuate widely, and essentially people just get whatever there is, and it's very variable. Okay. The downsides of a purely tech solution are often there is not as much visibility for the business. You will get a tech solution, but no advice and no technical support. And as a business, you may have to hand over the cash into that third party's bank account. The other alternative is what we call a managed solution, where you have an external provider. We provide that service. There's a number of other businesses that do, where they're actually managed by real people and real human beings, typically accountancy firms. We would be considered the largest of that. So currently, I have the privilege of managing the trunk arrangements of over 1,000 businesses across the UK. We do have a tech solution as well. It's called Trunkbox. Ours is working in conjunction with our team and your team. It's not just a completely standalone thing that operates, if you like, just through algorithms. It's really a software that supports the service that we provide to clients. But I think the key takeaways here for clients are, number one, if you've not already looked at this legislation, you need to do it today. Number two, if you don't have a trunk arrangement in place, you really need to look at doing that, because you've got to make a decision and implement it before the 1st of October. And number three, do not make the assumption that because you've always given the money to your staff, there's nothing that you need to do on this. There are obligations about policies and information, and every business is going to have to do this. And one of the unfortunate issues is, sometimes hospitality can be a little more transient. People come and go. Sometimes when they go, it's not on the best of terms. And there is a real risk here that a business could end up being taken to an employment tribunal for very, very serious consequences, simply because, for example, they didn't ensure that somebody was given a written copy of the policy at the right time.
Understand. Okay. All right, Peter. Well, we're up against time, as you know, today. So thank you so much. I know there was a lot to cover in there. For anybody attending, we have recorded this. So anybody that registered or attended will get a copy of this.
And I'm happy, Joe, if you want to circulate the slides to the attendees, because I'm conscious we went through it quite quickly. If people do then have further questions once they've read through that, as you say, I'm more than happy.
That's really very kind of you, Peter. Thank you very much for that. Okay.
Lovely. Hope that's been useful to everyone. Thank you all for your time and for logging on this morning. Joe, thank you for facilitating as ever.
A pleasure. Okay. Thanks very much, Peter. Take care.
Thanks all. Bye now. Bye-bye. Bye.